Accounting equation and Excel. Format our worksheet for a new month of accounting. Get ready and some coffee because we're about to learn the accounting foundation, the accounting equation using Excel. Here we are. And first, a word from our sponsor. Yeah, actually, we're sponsoring ourselves on this one because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever. Because our merchandise is better than their stupid stuff anyways. Like our Trust Me, I'm an Accountant product line. Yeah, it's paramount that you let people know that you're an accountant. Because apparently we're among the only ones equipped with the number crunching skills to answer society's current deep, complex, and nuanced questions. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com. Excel, if you don't have access to this workbook, that's okay because we basically built this from a blank worksheet but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you may want to begin back there, or you can just construct your own worksheet as we go, or possibly just follow along with good old paper and pencil. If you do have access to this workbook though, 3 tabs down below: example, practice, blank, example, in essence, answer key, the practice tab having pre-formatted cells so you can practice the practice problem with less Excel formatting. The blank tab, the one we will be working on, is where we started off with a blank worksheet but are basically working within a template now. However, we will be adding to that template as needed as we go practicing our Excel formatting when we do so. So let's give a quick recap of what we have done thus far, and then we'll go over to the example tab to get an idea of what we will be doing from here. Thus far, we've been doing our bookkeeping system using the accounting equation as, in essence, our trial balance from which we construct our financial statements: the balance sheet, the income statement, the statement of equity, the income statement, sometimes called the profit and loss report. We started by pulling in beginning balances, imagining we had a prior accounting system that we're pulling those balances in from, just the balance sheet items of them. And then we recorded transactions typical to a startup business, the need for capital, the need for cash, in other words, which might come from the owner investment or from taking out a loan. Then we recorded the investment of that cash into the startup costs necessary to help us to generate revenue, that being typically property, plant, and equipment, and then possibly inventory if we sell inventory. And then we recorded some transactions in the normal course of business, which we expect to be the transactions more likely to be repetitive as the business continues in the future, making sales and recording the expenses. We then ended up at the end of the first month of operations. So now we're going to say we're at the end of the first month of operations here. We created our financial statements from these ending balance numbers. And then we did the closing process, closing out the income statement. These items are now zero, closing them out to the equity section, noting that we're doing that on a monthly basis, whereas in practice you might do it on a yearly basis, or you can visualize what would happen in accounting software as you run different reports on the income statement for different timing frames. But you want to understand the closing process to see how those reports tie into, in essence, the balance sheet. So what we would like to do now is say, I want to report the current activity without all of the baggage up top, the detail of the baggage basically up top. So what I'm going to do is I'm going to copy this over so that if I mess up, I can go back and fix it, because we're going to do some deleting. So I'm going to put my finger on, I'm going to hold down the Control tab and then left click on the blank tab and drag it to the right. And then maybe I'll double click on this tab and call it month number 1. And so this is going to be then our blank tab that we're working on, which will be basically month number 2 that we are currently working on. We could put that month number 2. All right, so now what I'd like to do here is be able to work at the top of the worksheet again, which means I'd like to pull my beginning balances from the bottom point up to the top point here. So in essence, I can basically delete everything that's in the activity and pull in the ending balances from our prior worksheet into the beginning balances of our current worksheet. So maybe that would be like the easiest way to go here. So this seems scary, but I'm just going to go ahead and delete everything and give a recap of what we are doing, and then we'll pull in those ending balances into our beginning balances. So remember, the accounting equation is summarizing what's happening on this side. I'll delete everything under the first row. I won't delete the first row. I'll delete all of this. And then I'm also going to remove the underlines so that we have a nice clean, just green. And then I'm going to delete everything under the first one again. Here, I'm going to leave the equals and the plus signs. We'll delete all that. I'm going to get rid of the underlines. And then I'm going to do the same thing for the equity. Taking all this info, delete that, get rid of the underlines. Okay, so that's nice and clean. And then this top one will change once we adjust the beginning balances. So then we have all of our accounts. Now, like in a QuickBooks system, now that I've done 1 month of operation, all of the accounts are the ones that I want to possibly keep going forward. In particular, we added accounts to the income statement and the expenses. We expect typically for those accounts to be still necessary and used in future months because the bookkeeping process is typically repetitive. So now I'm basically cleaning everything out, but keeping the accounts, which is basically the chart of accounts in essence, in play. So I'm going to remove, once again, everything in here. I'm just going to delete it and get rid of the underlines. So I'm going to delete all of this. It's a lot in there. Let's delete that. Get rid of the underlines so we have a clean slate. And then I'm going to go back on this one and delete all of this. So these are the liabilities. And boom. And get rid of the underlines so we have a clean slate. And then over here, one more time, we'll delete all of this. Delete, and then get rid of the underline. I also saw that I had this yellow cell. I'm going to format paint to make it blue. All right, so that looks good. And then we have the subsidiary ledgers. Remember, the subsidiary ledger is going to give us information that backs up and supports the accounts receivable, in this case, by not date, but customer. I'm going to delete all this, and then we'll put the beginning balances back in play. So let's delete this for now, all the way down to here. Delete. There shouldn't be any underlines here, so we should be good. The accounts payables, the subsidiary ledger supporting the payables that we owe to vendors. Once again, I'll delete all that. And there shouldn't be any underlines. And then we have the subsidiary ledger for the inventory. So these are the inventory units. Once again, I'm going to delete all of them. This is probably the most complicated one. I'll delete all of them, and then we'll add those beginning balances back into play from the prior, from this tab over here. So I'm going to delete all of this. Delete this down to here, get rid of the underlines, and then I'm going to do that across the board. Delete all of these, get rid of the get rid of the underlines, and then I'll delete all of this. Delete, get rid of the underlines, delete this, get rid of the underline, and then we'll do it over here. We'll delete this. Get rid of the underline, delete this, get rid of the underline, delete this, get rid of the underline, and that looks pretty good. All right, and then on this side, we've got the payroll information. These are the reports we used to generate the payroll. I'm going to keep those in play and just add to it down below to process the second reports for the next month. And then this is the timesheet. Once again, I'm going to keep that in play, and I'll keep the balance sheet formatting in play, and we'll just adjust it in a similar fashion as we did before. So that's what we're going to need to update. So then I'm going to go back to the left, and now I'm just going to put my beginning balances up top. Now this is where it's going to be a little bit fancy. I'm going to do something a little bit sneaky, a little bit fancy here. We're going to say, I'm going to first pull the balances before the closing entry right here. So this includes the income statement. So I'm going to take all of these balances. I'm just going to copy that. And then I'm going to go back to month number 2. I'm going to paste them here, but paste them only the values, not the formulas, because the formulas will do something wacky, right? Just the values. And that gives me the income statement, so that gives me my year-to-date income statement. So this is the prior month numbers. I'm also going to delete all this stuff. Delete all this stuff. Get that out of here. And delete. And get rid of any underlines or formatting. And I should probably just copy the formatting down because there's going to be indentations. So I'm going to format paint this first line and just copy that down so I don't have any indents or anything like that. Okay, so then I'm going to say, okay. And then this is going to be the prior month, including the income statement. So this one includes the income statement over here. It hasn't been closed out. And that will allow us, as we go forward, to see the year-to-date numbers by taking whatever we have in the current month and adding this to it, the prior month income statement, which will give us a similar feature as we see in like a database program, allowing us to run, in essence, the income statement for 1 month of activity, as well as add the prior month of activity so that we can see the year-to-date income statement. So we'll see that in a second. And then I'm also going to put in the prior month closed to balance sheet. So let's also then go back on over here, and I'm going to copy the next balance down here, the one that has been closed out. I'm going to copy these numbers, which has nothing in the income statement. And then I'm going to paste that right here. Boom, values only. So now the balance sheet is the same, or at least the assets and the liabilities are the same. But the difference is in equity, where we have owner's equity here has been closed out to, has been increased by net income, whereas the income statement is 0. So in month 2, I'm going to have the activity based on these numbers with nothing in the income statement. And then when we get a new balance, I could then get the year-to-date numbers by just adding the new balances plus this top column, which will give us the year-to-date numbers on the income statement if we want that, giving us the option. All right, so that's going to be this one. Let's copy down the formula so that we have those two here. And so now those two are both in balance. All right, now let's go to the subledgers. So I also need my beginning balances for the subledgers to be lining up. So let's go back to the month 1. And what I'm going to do is I'm just going to copy the ending balances over here will be my beginning balances. Now this gets a little bit messy because I have to kind of look at the totals for the columns to see what the totals are for each. So let me go to the bottom of this thing and like sum them up. So we have a summary of everything. So we'll put the total down here. So let's recap this again by saying this is going to be equal to the sum of all of this, Anderson. That shows the increases and decreases, and it's 1 because of rounding. I copy that across. So there's our total. So if I sum this up equals the sum of these 3, I should get the same number here. So these are my kind of ending balance numbers. I'll make it black and white in this worksheet so I can see them. And then I'm just going to copy that and put those ending balance numbers as my beginning numbers here. Right click, pasting them 1, 2, 3. And then the total is just going to be equal to the sum of these. So that 14,687 should match what's in my accounts receivable, 14,687. Let's do the same thing with the accounts payable. I think they're all zeros, but let's go back on over and do the same thing here for the accounts payable equals the sum of all of the activity. We only have one vendor. We'll have more this time because we're going to do more accrual stuff on the second month. It's at 0. So the sum is just, of course, 0. So I can just go back on over here and just say it's 0. And then equals the sum of one number is 0. All right. So now the most difficult one, we'll do the inventory. So now I'm going to say the inventory. Let's go back on over here and just copy each of the inventory items. So we had the ELP, and let's just copy the ending numbers. We ended off with 5 units at 400. Let's put this as the ending balance. I'll just copy this whole thing out this way. And I could just copy it straight out because, well, let's do it this. Let's copy this and then come over here and paste it. 1, 2, 3, and then I'll multiply the ending out this times this. So there's the 2,000, 2,000. So then I'll just say underneath it, I'm just going to bring that balance down equals the one above it. I want to bring it all the way down to the bottom. I'm going to get rid of the underline and then bring this all the way down to the bottom. And this last one, I want to make that green again. We'll make that dark green and white because that one is what is being included in our calculation up top when we sum this up to see if it matches what's on the trial balance. So if I go underneath it, let's do the one underneath. So now we've got the ending balance is right here. I'm going to say this is the balance, or just call it the balance. And then I'm going to copy from here to here, copy. We'll paste that in my beginning balance, 1, 2, 3. Calculate it. This is this times this. This equals the one above it. Get rid of the underline. I thought I got rid of the underlines. Copy that down. Make this green and white. All right, maybe I added the underlines instead of getting rid of them. Do they all have underlines? Oh my God, that's what I did. Let's get, let's just remove the underlines. No underlines. I wanted no underlines. You got it backwards, people. Let's get rid of the underlines. You did it wrong. You did it opposite. You flipped the script. The script was supposed to go the other way. Let's get rid of the underlines here. Let's get rid of the underlines. I did this on every one. Dude. I thought so we'll just get rid of the underlines. No underlines. You know what I meant, Excel. If you were smart, if you had some AI intelligence, you would have told me. Okay, whatever. Let's get rid of these underlines. All right, back to it. EPR, we're going to go back on over here. And so we'll just copy this last bit for the EPR. So I'm just going to say copy and paste 1, 2, 3. Do the formula on the outside equals this times this. Copy it down, or say this equals the one above it, and then copy it down. Make this one green again. Boom, boom. Green and white. All right. And then we'll do the same thing for the one below. The one below yo, the EPSH. We'll take this. We need another balance. Balance. Taking this bit, copy. pasting it, 1, 2, 3, multiplying in the outer column. This equals the one above it. Copy it down, making the bottom bit green and white. All right, let's go back up to the top. Now we're on the GIUSA. Let's do that one. Got like 3 more, I think. Almost there. So this one, once again, we need the balance down here. We're gonna copy this across like that. Copy it, put that over here, paste it 1, 2, 3. And the ending balance is this times this. This equals the one above it. Copy it down, copy that, roger that, greenify it. There we go. One below it, this is our ukuleles. How many ukuleles we got around here? We've got 4 ukuleles at $24. Let's bring that to our worksheet over here. Pasting it 1, 2, 3. Multiplying in the outer column, this times this equals the one above it. Copy that one down, roger that, copy out 10-4, greenify, and then one more time. Scrolling up, we got the GSBs. Let's go do that one, and then we should be checking our number, our ending balance. So this should be an ending balance again. Wait, no, I already have the ending balance, that's right. We'll take this bit. This one has a negative guitar in it. That shouldn't happen. Something is wrong here. That's okay. We're going to copy it as it is. We have to work with what we have thus far. You can't fix it until you get the beginning balance. It's a negative number. That doesn't make no sense, man. Okay, we have to our physical count clearly doesn't tie out properly. We're going to greenify it, but we'll do that. This is not the time. This is not the time to do that, to think about that. So then let's go to the left. And now I can check and say there's all my ending balances are feeding into that, all the green numbers. And so that should match. Then, by the way, if you don't have these things in your quick toolbar, they're in the data or the formulas. And they're in the formula auditing right here. And there's the remove, boom. They're great. So I'm going to check this to my ending balance over here, which should now be this inventory 9698, enter. So now they are matching. 9698 matches, green 0. So there's our beginning balance for the subledger. So I think we're cleaned up, ready to go. So here's the prior month information in detail that gives us that information for the subledger. If I want kind of like similar to the general ledger activity to see what is actually happening. And then here's our prior month balances in terms of just the ending numbers, which in particular, I would like to see on the income statement so I can generate reports, both in terms of the current month as well as the prior month. And then we can move forward with the current month activity, adding that information, particularly on the income statement, to this column to see 1 month of activity, our performance for 1 month, but also be able to then add our ending balance for that month to the prior month to see basically our income statement, performance statement for the 2 months. We could subtract the 2 of them as well to get the reports on the income statement, the performance statement for the difference on how we did from 1 month to the next month, which, remember, that's the typical thing. The beauty of a database program is oftentimes the ability for the performance statement, the income statement, to be generated multiple different ways. I can look at 1 month. I can look at the 2 months combined, the year to date, both months. How did I do when I kind of equivalent to driving the car? How far did I drive the car in a day? Reset the odometer. How far did I drive the car in the next day? And then I can ask a bunch of questions like, okay, well, how far did I drive the car in both days combined together versus how far did I drive the car one day minus how far did I drive the car the other day, to see the difference in performance of how far I went in the same time period from one period to the next period, and so on and so forth. We could do percentages. What was the percentage increase of one month versus the last month, and so on and so forth. And as we had more data, we could do it for 3 months or on a quarterly basis or on a yearly basis, which again is the beauty of a database program. But we still, as we do that, want to see how the income statement fits into the balance sheet, which is reported as of a point in time. So that's kind of, what we want to keep in mind, and what I think doing this in the format that we're doing it here in Excel gives us more transparency about, so that when we go into a database program like a QuickBooks or a Xero, we understand what the reports are doing and how the relationship works, which you can't really see in a database program as easily because it's kind of behind the scenes. That's what's happening behind the scenes, but you want to understand what it's doing, and that's what we're doing. We're understanding stuff. That's what we do. That's what we're trying to do, at least. So that's that.